Welcome everyone to Community Connections, and my name is Todd Selecta, and I'm the Director of Education and Communications for People Care Health Services. Now, People Care Health Services' mission is to enable individuals to live better by supporting their overall health, dignity, choice, and independence through advocacy, education, and quality services. Community Connections is part of that commitment to education and advocacy, seeking to connect our caregivers, our clients, and stakeholders with various individuals and organizations throughout the community that may in some way be of support. So we are glad that you've made time to join us today. The topic for this month's Community Connections: is your home working for you? 10 things you need to know about today's market. Our guest will be Rona Lewis of Starkey Mortgage. Rona has owned and operated a residential mortgage company for over 25 years, but for the past 6 years has called Starkey Mortgage her home. Rona shares that she has found it to be very rewarding to find ways to help people become homeowners or even help homeowners better use this asset to improve their lives. But Rona, on behalf of People Care Health Services, welcome to Community Connections. Why don't we start with just tell us a little bit about yourself, your story, and why you're here and how you ended up doing what you're doing.
Wonderful. Thanks, Todd. And I really appreciate People Care inviting me in to have this opportunity to share some of our programs. Sarah and I have worked together in the past, and Sarah allowed me to open up what we call our community connection with People Care. Okay. And what that does for all of you and your employees is that whenever we do a loan for you, whether it be a purchase or a refinance, we can offer you a $500 deduction off your closing costs.
Excellent. Now, Sarah Ingalls is our co-CEO, so you know her.
Correct.
And you admit that in public and everything.
Absolutely.
Yeah, okay, good.
Yes, with pride.
Yes, with pride. Good.
So I just want to take a little bit of time and kind of share our family at the office with your family and let you know who you'd be dealing with and why we feel that we can support any needs that you have. So I myself have been with Starkey for 6 years, as you mentioned. I had my own company prior to that, and one of the reasons that I chose to go with Starkey is because of the values and the integrity that they share. So they share my same reasoning when I'm taking care of clients.
Okay.
Being in the business since 1982, I started as a processor.
Okay.
I worked in closing. I did underwriting. So it gave me a full view of everything that goes on, and I think that's important. I have an assistant, Brenda Wesley, who owned her own company for quite a few years. It was more on the title and the closing side of it. In fact, she used to be my closer some 20 years ago.
So you guys have been together for...
We've been together for a very long time, off and on in the industry. But Brenda is a wealth of knowledge. She is my right-hand assistant. So if I'm not in the office like I am today and somebody calls in, there's always somebody there that can answer your questions.
Perfect.
Then we have Joe DeLapp, who is our processor. So a processor's job is to take the paperwork after we get it from the buyer and tidy it up for the underwriter to make a nice, neat package ready to go for that stamp of approval. So she dots the I's and crosses the T's and gets it ready for closing.
Okay.
So the next thing I'd like to do is just start talking about some of the loan programs we have.
Because when we first met, you listed out a bunch that I did not know about and a couple that I want to get in on. So yeah, I'd love to hear about them.
All right, well, let's start with just the basic loans, which is FHA, VA, and conventional. And one of the things I'll say about VA is veterans are not aware that, number one, if you have disability, in most cases you're exempt from the VA funding fee, which can be quite expensive. The other fallacy with VA is, oh, I've used it once, I can't use it again, which is not true. As long as the property has been sold that you originally had, then you can use your VA time and time again.
Really?
Yes.
But you said if they have a disability, is that a qualifier?
So, that's a qualifier. Okay. So if they have a VA disability from one of the services that they served in, then that alleviates them from having to pay that funding fee. VA is a straight zero down loan, no matter how many times you use it. So whereas conventional and FHA require down payment, VA is zero down.
Okay. We
have assistance programs that can help you with the closing costs. So
you as Starkey Mortgage or a program with the government?
Starkey Mortgage with government programs.
Got it.
So there are quite a few of them. Most often you'll hear people talk about CHAFA, and there's numerous CHAFA programs depending on your income and qualifications and what you need. So realistically, you could buy a home as a veteran zero down, and pay zero in closing costs
Huh.
because it's all covered for you.
Well, and again, we do have a number of folks in our stakeholders, and our clients, and our caregivers who have served, or certainly know someone who has served. So that's good information.
So then let's touch on FHA. FHA is probably the most popular first-time homebuyer program. But again, you could buy a house FHA today, sell it next year, and still use the FHA again, even though it's considered first-time homebuyer. All of these programs for first-time homebuyers to help with down payment and closing costs are available in most all situations. And if they can't get it for some reason, lower credit scores, they can always get a gift from family members. So that's another alternative to help them with down payment and closing costs.
All right.
We're fortunate that our loan limits are high enough in Colorado that, well, fortunate and unfortunate, because sometimes it puts some of our first-time home buyers right out of the market when they're thinking $250,000 and $300,000 for a first-time home.
Huh.
But the same program's available, and it's a 3.5% down program. But in most cases, you can get 3 to 5% to assist with the down payment and closing costs through CHAFA.
Okay.
Not all lenders are approved through all programs. So
say that again. So
not all lenders are approved with all assistance programs.
So how do our clients figure out who's approved, and how do they figure that out?
Well, Starkey's approved with all of them, but you can certainly go on to the CHAFA website and it will list them. One of the programs that is fabulous for the Aurora is called HOPE, H-O-A-P. And you'd have to just call them to see who their lenders are, but we're also one of their preferred lenders. In fact, I teach their first-time buyers home classes for them.
Oh, really?
A couple of times a year. So I'm very familiar with the program.
Excellent.
And then the third program that's most often out there for people is conventional. And you want to use conventional when you can because of the mortgage insurance. FHA has mortgage insurance that stays on for the life of the loan.
Okay.
But it's also a 5% down program, or 10 or 15 or 20, depending on how much you have. 20% gets you completely out of mortgage insurance, probably like you bought your home.
Mm-hmm.
But once you gain equity, which is happening very rapidly in Colorado, you can negate that mortgage insurance. So
Which
if you start
translates
out
to
lower payments
Yep.
down the road, absolutely. There's also jumbo programs. And jumbo puts you in loans over $424,000. So Starkey has some of the best programs out there for jumbo. Most of the time you have to put 20% down. We have a jumbo program that allows 10% down on a jumbo. And the pricing is sitting right there with the conforming FHA and VA rates.
Okay. Huh. All right. No, there's a few things in there that just I was surprised about. So now with our market, we've obviously seen a surge in property value, and there's probably some pros and cons to that. And so our folks, this probably is their single asset, or we have a lot of young caregivers that are coming in too. So thoughts, advice on as they enter this kind of market?
Well, if they're in the market already as owning a home, then their equity is a great resource for them. I mean, whether it's being that they've got kids to put in college, they need to pay off debt, maybe as they're older and they want to look for that second home someplace on a golf course, get out of the cold part-time of the year, that equity relates to dollars that helps them do so many different things.
Okay.
And that can be done on FHA, VA, conventional, any of the programs that are out there.
Okay.
As far as first-time home buyers coming into the market, the assistance programs are really what's most important to them, because we're going to work with what their comfort levels are, not always what they can qualify for.
Yeah.
We want to make sure that they're making the payments, not us. So if they're only comfortable at $2,000 a month, we don't want to push them into a $2,500 payment. But when we sit down with them, we walk them through step by step as a first-time home buyer exactly what it takes. When we set up the process of their file, they'll get videos from us that explain what their credit is, what to do and not to do, what to be prepared for, the next steps of the process.
Okay.
So let's talk just a little bit about credit for first-time home buyers.
Okay.
They come in, they don't have any idea, and financial people are scary. You know, it means that you're getting a loan. It's not the fun part of going out and looking for the house, but you've got to do the financial part before you meet with that real estate agent and get your hopes up. So we pull credit. If it's not exactly where it needs to be for the loan program that we're using, we'll try to always put them in a different program. But maybe there's somebody who needs credit repair, which we're happy to help with. In most cases, we can coach them through what they need to do over a 30, 60, 90-day period that prepares them to buy a house.
And you'll work with someone like that even if they can't purchase until 4, 5, 6 months down the road.
Todd, I've worked with people for over 2 years getting their credit taken care of. I have a gal at the hospital right now who just keeps trudging away at it, and she's going to get there, and that's very rewarding for people to know that they did what they needed to do, and it wasn't a scary process, and they know coming into it that, you know, they've got student loans or whatnot.
Absolutely.
And so we work through that with each and every buyer. So once the credit is taken care of, then we sit down and we start talking to them about the cash. You know, the assistance programs, gift money, what you need to save. It's tax time. That's a great time for people to be buying a house. They're getting a tax refund in most cases. They're renters. So once they start entering into and they finally purchase a home, the next tax year they're actually going to get tax credits because they're homeowners.
So even if it feels tight to do it now, boy, because again, if you're getting a refund, there's 18 things that thing already earmarked for, but you're saying if they can hold on to that and use it, the tax break later on is going to be infinitely better for them.
Exactly. And there's a lot of first-time homebuyer programs out there that offer what they call an MCC, which is actually an additional tax credit for those people. So first-time homebuyers are probably our specialty. We work with, of course, being in the business, I have probably a database of 1,500 people, and it's rewarding to see people coming back and bringing their kids and their grandkids, but really first-time home buyers and helping them walk through that process is fabulous. One of the other things I want to mention, especially with what you all do here with caregiving, is we have a program called Family Opportunity.
Okay.
And it works two ways. So what it does is if I have elderly parents that can no longer have qualifying income, but they need to move into something like Heather Gardens or Windsor Gardens, that's here in the Aurora area.
And these are assisted living or
right.
retirement communities. Yep.
So I, as the child, can buy that house for my elderly parents as an owner-occupied. So if I were going out and buying an investment property, I'd have to have at least 20 to 25% down and accept a higher interest rate. Well, this is not an investment property. My parents are going to live in it. So therefore, I'm able to buy it as an owner-occupied, which is huge for somebody wanting to take care of their parents. They can go in with 5% down and get the current interest rates.
So you and I were talking earlier. So my parents are aging, all right, and my wife and I have a home that we've been diligent about. What you're saying is that we could actually, didn't understand right, we could purchase a home for them and move them in using their equity to make it an owner-occupied?
You don't even have to use their equity.
Okay.
You could just put a simple 5% down or 10 or 20, whatever it may be, because let's say they need some of their equity out of their current home to live on every month. Yeah. But you just want to provide them with a place to live. Yep. And you're able to do that as an owner-occupied without buying it as an investment.
Okay.
The other side of that program are parents that can buy it for disabled children.
Oh.
So kids that really...
A number of our families are caring for children with special needs and disabilities, so please.
So let's say they're of adult age. They have become to the position where they really do want to live on their own, and the parents don't want to put them in an apartment or a rental someplace. They want to put them where they can kind of keep an eye on them. Same program exists. Parents can go in and buy it for the child, and the child lives in it as an owner-occupied program.
Excellent. So, and again, folks, if you have questions, go ahead and send them on through, and we'll pass them on to Rona.
And also, Todd, hopefully my information will be on here afterwards, and anybody who would want to visit with me, whether it's a first-time home buyer or they currently own a home, We'd love the phone calls.
Yep.
There's no
Well, absolutely.
obligation.
We're gonna we'll record this and it'll go up on our website, and then we'll actually put your contact information up there too. So interesting thing, with my parents aging, I hear these ads and things about reverse mortgages, and I can admit, some of them sound like a scam, and some of them, but yet I know people that are using them. So what's your word on reverse mortgages?
Reverse mortgages for the right person is excellent. So someone who has, and they can use it for purchasing or refinancing. But at this point, let's just talk about the refinancing. So they own their home, they're on fixed income, their retirement has gone away, so now they're just strictly on Social Security, and they need an additional $500 or $600 a month. So they can actually do a reverse mortgage that will pay them the equity out of their home every single month.
Huh.
Or let's say that they have a mortgage on it. They can do a reverse mortgage, and the reverse pays the mortgage. So now their only expenses are, their health care, their groceries, and
Just sort of the basic.
the basics, exactly.
Because again, this is probably the single biggest payment that someone has, or expense.
Right.
Unless you're from a generation, again, my folks are in that generation where they've stayed in the same home for 40 years and it's paid off, kind of thing.
So if they were needing income, a reverse mortgage at their age is perfect. We don't like to see people go into them too early. In fact, there are age restrictions on it.
Okay.
Because they could run out of money or run out of the equity.
Okay.
The other nice thing is once the parents are deceased, then any equity left in that property can still go into their estate.
Okay.
So it's not just given into the reverse mortgage.
Right. Right.
But something else you and I were talking about also is, possibility of having equity in your current home, and maybe you want to make a mother-in-law's quarters in it.
Yep. Yeah.
So we have a program called a renovation loan.
And by the way, if my mom's listening to this, I don't want her to jump at this, but is there a possibility that we can maybe add on a place for her?
And I understand. So let's just talk about the renovation in general.
Okay.
Somebody currently doesn't want to move. They want to stay in their house. They like the neighborhood. They like the neighbors, but they have not done a kitchen remodel for 20 years. They want granite. They want new countertops, cabinets, whatever, bathroom. They have the equity in the property. If you just do a straight refi, the appraisal is going to come in, and it's going to give us a value of $250,000 as is. So there may or may not be enough equity at that time to remodel the bathroom or the kitchen.
Okay.
So let's say that we want to do the renovation loan, and what that does is you actually go out and get bids from contractors, and they say, okay, it's going to be $30,000 for this and $15,000 for this. Now when we have an appraisal done, it's not an as-is, it's subject to. So now that same house that is only valued currently at $250,000 might appraise for $300,000. So that's what we're going to base the loan off of.
Okay. So is there now that's to do renovations, you said?
Correct.
That would include like a parent suite or something like that. Anything that would
Right. Carriage house on your property. That would include. You can actually on this program completely scrape the house. We have some of the older homes in older neighborhoods that the foundation is good, but the bones of the house are not. Yeah. So the program actually allows you to completely scrape the house and start over.
So now let me ask you with so say you're not even sure you could qualify for anything. It could be that your income is such that you can't, or it could be that you made some decisions along the way that you're paying for now, so even a $200,000 that sounds insurmountable. How would you work with folks that are really in that kind of situation, going, I'm not even sure I have two sticks to rub together, whether anything else. I mean, what would they do?
That's a great question, because FHA as well as conventional allow what we call cosigners, non-occupant cosigners. So you have kids that you want to help get into a house, and they are just a little bit shy of being able to qualify, but you know that they're capable of making the payments. Well, you as the parent can go on as a cosigner, which substantiates the income and help them qualify for that house to get into their first home.
Okay.
And that can be done on conventional as well as FHA. It cannot be done on VA because only the veteran and the spouse can be on a VA loan.
Mm-hmm. Now, so I have a private question that came in. It said, let me check it. This person's being very honest. The truth is, I don't know really what our situation is, and I know we need to start thinking about it. How open are you to even just looking at our situation, just talking, even if we might not end up having the ability to use you?
Every day I do it 10, 12 times a day. Mm-hmm. I have real estate agents, referral partners, and a client, someone will call me, such as this person, and we will just walk through it on the phone. And it's not scary. I'm going to ask where you work, how long you've been there, because that determines whether or not I can use your income. Are you paid hourly? Are you paid salary? Do you have bonuses, commissions?
Yeah.
What are your debts? And debts are not considered insurance and health insurance. Debts to us are, what is your rent? What's your car payment? What's your credit card? Student loans. We compile all of that on the phone within a 5 or 10 minute period, Todd, and I can let that person know what they would qualify for in a house. Then we can talk about what amount of cash they have. Then the next step, if all of that looks good, is for them to do the online loan application, and I pull the credit.
Okay.
If they just absolutely know that their credit has issues and they can tell me specifically what that is, I can walk them through the steps of correcting it. If they don't, then we suggest that they let us pull a credit report, because ours are not like a car when you're going to finance a car or something. They're tri-merge, meaning all credit bureaus. They do fraud alerts, Social Security alerts, and we have an absolute full picture.
Okay.
So I'd love the opportunity to speak with them.
So again, this one came in by text. I told you, they come in all kinds of ways. Okay. This one is a text that says, so what I'm understanding is you work with all income levels. And because this person's saying, I hear things like $400,000, $500,000, $600,000, but I'm nowhere near that. You work with all levels of income?
All levels.
Okay.
If we can find you a condo or a townhome out there at $75,000 to $100,000, $120,000, I think I did a loan at the end of last year that was $55,000.
Okay.
So absolutely.
Good.
Those are first-time home buyers, and they have to start somewhere.
Okay.
And they have to know that they're working with people who take the scariness out of it.
Good.
We want that fear factor to go away.
Nice, nice. Now, Colorado is in just market-wise, its property values are going up all over the place.
Yes.
What does this mean for people that that have a home or are trying to get in? Let's go to, they're trying to get into the market. Is it just, there's no way? I mean,
no, there's ways.
How hot this is, or
there's ways. That's where, you know, if they can't qualify for what they want on their own or what they need to be living in to let's say even get a $150,000 little condo starter home, and the parents or a relative, it doesn't necessarily have to be the parents, it can be a relative, can help them qualify to get started and build up that equity. That's a great way to do it. Or maybe they just know that they've got to save a little more, or maybe they know in 6 months they're going to have a raise and better their income position. So those are all things that get factored into it.
Okay. And this individual said, is a house really a good investment anymore? Ever since the crash, why do it?
It's an absolutely perfect investment. Where else do you save your money? You know, it's, look at the increase in equities. I have people who started thinking about it a year or 2 years ago, and now they're coming back going, oh, so why didn't I do this? You know, we're seeing 7, 8, 10% increase in equities. So you buy that $100,000 property, and in 1 year you've got $7,000 or $8,000 sitting in the bank, so to speak. When you look at the rent versus own factors, and anybody that wants to call me, I'll be glad to send them charts or direct them to a website that gives that information. That will tell them what they're going to save by owning a home versus renting.
And this individual says, you know, we're out here on the West Slope, just south of Grand Junction. Do you guys have any offices out that way, or is this strictly a Front Range thing?
Okay, so I'm a Montrose girl.
Oh, we got a Montrose. Now, is it Montrose or Montrose?
Montrose.
Montrose, got it, okay.
I was born and raised in Montrose. I still do a lot of business in Montrose because we are so internet driven or phone applications by phone. I can do loans all over the state. So
Okay.
yes,
So
I'm
you could, because again, we are statewide and we have a lot of folks in rural areas, even remote rural areas. We definitely have folks up and down the 50 corridor out there. So, but what you're hearing, folks, is there's a Montrose girl here who, would you just wander and got lost and ended up in Denver? Is that what happened?
kinda, you know, a farm girl that couldn't wait to get out of Montrose, and now she wishes that she was back
Yep.
there.
Yeah.
But that brings up another program that we have is called USDA,
Okay.
and it's a great program for rural areas. I won't go into a lot of detail about it, but anybody who actually we
Now,
even have,
USDA is, what does that stand for?
it's a government funded program,
Okay.
but it's lower down payment, lower interest rate, and assistance.
Okay.
But it can only be used in some of the rural areas.
Oh, so it's specifically for rural access.
Right.
Like that.
Bennett has got
Okay.
some. Elizabeth, believe it or not, still has some. Counties in Colorado Springs, Pueblo,
Okay.
those areas.
Well, then, for the West Slope, you're saying it would fit the West Slope for sure.
Perfect.
All right.
Mhm.
Any other questions or thoughts from folks? I think I covered the 6 or 7 that came in. Anything else out there, folks, that you want to pass on to our guest?
So I wanted to ask you, Rona, for folks that have bought recently and did not have the 20% to avoid PMI insurance, how long do you think they should wait in terms of the building of equity due to the increasing value of homes? How long should they wait before asking for an appraisal to see if their home has increased enough that they now
Well, okay,
have hit
so
that 20%?
it will depend on whether or not you did an FHA loan or a conventional. So if it's FHA, then you would have to refinance. So at that point, you call me, I get a realtor to run some comps for us, and we see if the comparable is there, the value is there before we spend money on an appraisal. So FHA has to be refinanced out of it because it's life of the loan mortgage insurance, unless you took it out over 7-8 years ago. If it's a conventional loan, normally in the market that we're in Colorado, especially Denver, you're going to stay in it for 18 months to 2 years, and at that point we're starting to see that we can go in, request an appraisal, and just have the mortgage insurance dropped.
Okay, thank you very much.
Okay. Anything else that you want to add to folks? And anything that you presented, anything you want to expand upon or share further as we sort of wind it up?
There are so many mortgage advantages. There are so many loan programs and assistance programs that I just invite each and every one of them to either email me, call me personally, and every situation is different. So it's virtually impossible to try to put this into one little lump sum, what's good for everybody. Some of you are first-time home buyers. Some of you already own your home, want to do renovation, want to do a simple refinance. It's different for everybody. So
Sure.
I look forward to the phone calls.
Again, the last sort of closeout here, Sarah, our co-CO, said she personally wants to let everybody know that no matter what their financial situation is, Rona and her team will work with everyone, and it's her goal to help people reach whatever their goal is. So there's no need to be embarrassed or feel that you won't ever qualify. They will come up with ideas and options that fit where you're at or help you get where you want to be. So
Absolutely.
So you
Thank
got that
Sarah.
endorsement as well. So again, that brings us sort of to the end of our March Community Connections, and on behalf of People Care Health Services and all those who attended, we want to thank you, Rona, for joining us today. We have recorded this presentation and we'll make it available on our website at www.peoplecarehs.com, and you can click on the Education tab and you will see a link to recent video seminars. There you will find links to not only today's webinar, but also to many of our past ones as well. Our next Community Connections will be Wednesday, April 12th at 1 p.m. We will send out invitations via email and voicemail blasts, as well as through our various social media platforms. Please be sure to like us on Facebook, as we are constantly posting helpful hints, links to videos, announcements, and highlighting our clients and caregiving team. With that, we will bring this Community Connections to a close. And remember, Colorado proud and community strong. On behalf of People Care Health Services, we hope you all have a good rest of your day. Thank you again, Rona, for joining us.
Thank you very much for the opportunity.